Welcome, guys. My name is Tristan A.Wilson, and I've been involved in the Forex market since over 5 years now. I'm also managing the Vertex FX Telegram channel, where every Sundays I'm sharing my view of the market with a more institutional approach, with both technical and fundamental analysis. And as I get a lot of demand, I'm now starting this new series where I'm going to do the same thing on a live video. So if you're not already in the Telegram channel, the link is going to be in the description. All those analyses are going to be shared there as well. And so guys, let's take a look at the charts. So the first pair that I'm going to talk about is Euro AUD. So as explained last week in the Telegram, we've been forming a nice head and shoulders for the past weeks, and we just broke down this neckline, what we see in the yellow rectangle. And as expected, we broke down, we retested, and I took my first short entry there. And then the white line that we see here, if we look on a daily time frame, it is as well the neckline of a more bigger head and shoulders on a weekly time frame. So this is going to be my first obstacle that I see for the future of these trades. And what I mean by obstacle, it means that I always divide my positions by at least three positions. So I always divide my trades by at least 3 positions. And when we broke down those obstacles, I'm taking the next position. So when we are going to break down that white line, that neckline, I'm going to take a second position here. And then the next obstacle that I see for this trades is the white zone here, which is a supply and demand zone that has been tested in the past. So if we succeed to break down this zone as well, I'm going to take my third positions. And then this short for me is valid at least until the last low of the 16th of September. So basically, for me, the Euro AUD is very bearish for at least 200 pips. So on a fundamental side, if you look at Europe, the European economy is doing very badly, and even more with the Brexit. So if you look on a fundamental side, Europe is losing its biggest economic capital, his biggest financial capital, which is London. So I'm not seeing anything good for the Europe right now. But the most part is with what's happening with AUD, so the Austrian dollar. And the thing is that right now the US China is kind of stabilizing for the last part of the year. And what it means for the Australian dollar is if you look at a more fundamental side, Australia, I mean, the biggest client of Australia is actually China. So China is the place where the Australian people export the more things that they are making inside the countries, which means that China is their biggest client. And so anything that's happening bad within the US-China trade war, anything that's happening bad for China is also bad for the Australian dollar. And so as I'm seeing the US-China stabilizing more for the last part of the year, I'm seeing also the Australian dollar taking some value here, which is backing up this Euro AUD short. Now, the second pair that I'm going to be looking at is USD CAD for this week. I mean, for those who follow me on Instagram or even in the Telegram channel, they know that I've been trading this pair for a long time now. But what's happening right now, it's really interesting because if you were following my call in the Telegram, we short a couple of positions in the 618 daily, in the daily 618 here at the 1.33 500 level. But now what we are observing is that for this week, we've almost reached the first target by like 40 pips, guys. 40 pips from the first target that I called 2 months ago, which was 1.3200. But now we had the interest rate decisions of the Bank of Canada last week. And actually, the result were unchanged. So the Bank of Canada didn't change the interest rates, which is usually seen as more hawkish. So good for the Canadian dollar. But what happened here is that the meeting that they've done had some dovish comments because of the worldwide economic slowdown and the U.S., the United States cutting their interest rates. And so they had some dovish comments that saying that all those things could eventually affect the Canadian economy. So we've seen the USD CAD jump for about 100 pips. Yeah, 120 and even 140 pips. And so on the technical side for me, that was only a retest of what we call the, if you look on the more daily time frame, we have that, yeah, sorry for those fibs. We have that uptrend fib channel. And here for me is just the break and retest of that fib channel, and the pair taking some air. And with that last daily candle close, it is just a confirmation for me that this week it is going to drop further down, reach my first target. And if we succeed to break that last low of July 12th, my first target after that is going to be the 27.2 fib extension here, which is a confluence zone if you look in the past, on a weekly time frame. So this is a swing trade for me, guys. But I am still bearish on USD CAD, and it is going to be interesting to see what is going to happen this week. So I'm going to update for this pair in the next videos. Now, let's talk about a pair that I like to trade, which is Euro JPY, which is one of my favorite pair. If we look at a more weekly time frame, so since the beginning of the year, we've been in a nice downtrend with Euro JPY, which has been kind of easy to short in some ways. But since some weeks now, we've broken up this downtrend channel. If we talk a little bit about the fundamental here and the reason why, for me, it has breaking up this channel, it was first of all because of the US-China trade war stabilizing a little bit for the last part of the year, and as well we had the UK getting an extension for the European deal till the beginning of next year. So all those news are pretty good for the worldwide economy. And if you look at a yen as a safe haven, which it is, it's going to, you need to understand that every time something is going to happen, that is going to be bad for the worldwide economy or for the biggest economy, like Europe or the United States. So the yen as a safe haven is going to gain value when when something bad like a recession or a war or a trade war it is affecting the biggest economy. But in the opposite, when something good is happening for those great economy, the yen is going to lose some ground as well. So I think that I believe so that this is what happened here and the reason why we've broken up this downtrend channel. So on a technical side, if we look at those swing high and swing low and pullback, we are now and finishing the fourth wave, so the pullback of the 5 Elliott wave. And now, for me, we are now just about to start this fifth wave. at this key level zone, which is 1.20 300. All right. So for me, the last fifth wave is going to, the last swing high is going to be created this week. And so I'm going to be long on Euro JPY for this week, all the way up until the 618 weekly, which is 123.00. So this key level here, which we had 1, 2, 3 daily touch in the past, is going to be my first target for this last swing high of the Elliott wave pattern. And if we look on a more global way, on a more global view of what is going to happen in the next year, with the United States starting to cut rates for the first time in 10 years, and the European slowing down, losing its first financial capital, and losing the UK within the European Union. I really think that we are going to enter in a new recession. And so, like in every recession, the yen is supposed to gain back value. And I believe that it is around that level, so around the 618 weekly level, that we are going to gain back value, and the yen is going to fall back down from there. So this is my view for Euro JPY for the next weeks or months. I hope you guys enjoy. I'm wishing you a good profitable trading weeks, and I'll see you guys in the next video. Feel free to leave any questions in the comments. I'm going to be there to answer to all of them.